pre-COVID, there's been very little reason for local South African investors to consider global fixed income from a yield perspective, except for diversification and maybe hedging. Local yields has been very attractive. If you think back to pre-COVID, 2019, we had yields on money markets giving you around 7%. We had nominal bonds giving you close to 9.5%. And then if you compare that to what you get in developed markets, where a lot of the global fixed income industry at that time had negative yielding assets, and then we look at very low yields on offer. For example, we look at the US 10 years giving you below 2, the UK bonds giving you below 1, and then couple that with regulatory requirements locally. Obviously, I'm referring to Regulation 28 that governs how much local managers can invest globally. That used to be 30%. And local managers used to use that allowance mainly for growth assets, your property and your equities. So that has generally been the reasons for not a lot of interest in global fixed income. But what has changed, it's been two things. I think it's been obviously post-COVID, we've seen developed markets central banks fighting inflation, raising rates, resulting in very attractive global yields at the moment. For example, you can get close to 5 on investment grade, close to 7 on high yield. Couple that with the changes in local regulations that now allows for 45% offshore. I think now that gives local managers the flexibility to look beyond just your global property and global equities and allowing for for global fixed income. So I think those are the two reasons why, especially for us, that makes global fixed income a very attractive asset class. Yeah, I think it comes down to three things. When you compare, for example, a local indice, for example, a local index, which is a JSE All-B, versus a global index like the Bloomberg Global Aggregate Bond Index, where you have geographical exposure or geographical scope, meaning you got multiple countries, multiple currencies. Then you have currencies. Global fixed income gives you opportunity to invest in not just your developed market currencies like your dollar, your yen, but also emerging market currencies. And then lastly, but most importantly, global fixed income gives you the opportunity to invest in a much broader investment opportunity set. In global fixed income, you get opportunities to invest in corporate bonds and developed market, emerging markets. So just your investable universe is so much broader in fixed income globally versus locally. I think so. That's just the one upside that I think that global fixed income gives you, compared to local fixed income. Yeah, it's obviously, I think it's key. Obviously, if you take into consideration the complexity that comes with the asset class, what you need here is, I think, strong security selection. A small, locally we see is very much, a duration play. So, you need strong security selection. With that, you need strong teams. So we're looking for big teams that's got a proven track record of managing money in global fixed income. And also with big teams and strong teams, you're looking for, a strong skill set. That includes risk management, ability to allocate across different sectors, different countries, different markets. So I think the key for us would be to see and be comfortable with a manager that's got a proven track record to manage money in global fixed income. I think that's probably one of the key requirements for us compared to locally.